Welcome, everybody. David E. Smith Jr., Secret World of Money. And of course, we talk about precious metals and protecting your wealth with precious metals. And our guest, Mr. Fred Dashevsky, and he's here to also, being that he's a numismatist and also a coin seller, he can tell you a lot about money, the importance of it, and how it plays a role. Matter of fact, how it plays a role in the economy, how it plays a role in your life. And so, welcome, Fred. Thank you for joining us. Appreciate you being here today.
Happy to always be with you.
Wonderful, wonderful. And let's just start right off. And this is a question that's been asked regarding the Federal Reserve and how does the raising of interest rates affect precious metals, if it does affect precious metals?
It does in a degree that the value of gold and silver are, in a best way to looking at it, a mirror image of the U.S. dollar.
Mm-hmm.
So the stronger the U.S. dollar, the more expensive it is to buy gold and silver around the rest of the world in other currencies. So a stronger dollar will push down the price of gold and silver in the United States. A
Mm-hmm.
weaker
Mm-hmm.
U.S. dollar will cause the opposite effect. So right now we have a very unusual economic environment. Two things that are happening simultaneously that should not be happening at the same time. One is we have the highest inflation we've seen in the United States in 41 years. The
Right,
last
right.
CPI report was 9.1%. And even though we know those numbers are cooked, they still represent the highest level for inflation that Americans have experienced in over 40 years.
And we're talking
Now,
about Consumer Price Index, CPI?
yes,
Okay, okay.
which is, originally a basket of goods and services that included, food, although it discounts food and energy costs now, and it has been convoluted to the point where its accuracy is questionable. It
Mm-hmm.
is still a representation that is used by most economists to gauge the level of inflation in the U.S. economy. The
Mm-hmm.
CPI was 2 or 3% a few years back. It was running around 4%, and
Mm-hmm.
it jumped. I mean, it just jumped. And the 9% level, we hit 9.1. Again, it's the highest it's been in over 40 years. Now, at the
Mm-hmm.
same time that we have the highest inflation we've seen in 40 years,
Mm-hmm.
we also have the strongest US dollar against foreign currencies in the last 20 years. And that really doesn't make a lot of sense. With high inflation, you would think people would be concerned about the dollar and not be willing to be investing in it because the rate at which inflation is chewing away the value of the dollar is so high. But what's happening around the world is that as tough as the economy has been in the United States,
Mm-hmm.
comparatively to what's happening in Europe, we look a lot better. Comparatively to what's happening in Asia, we look even better than them.
So let me
Asia
ask
is
you.
experiencing really slow growth, in fact, negative growth. Europe is stalled, and they're experiencing a lot of inflation as well, but their consumers are not spending the way we are in America. So by default, the Asian economies and the European economies have dumped a lot of money into the United States because it seems to be a safer haven. I've referred to it as the cleanest dirty shirt in the laundry because it's the best way to describe it. It's not that the dollar looks particularly attractive. It just happens to look better than what it looks like in Europe and Asia. And all of that money pouring into the US has helped the dollar go up in its relative value to a level it hasn't been at in 20 years.
So this brings about the complexity, right? And you've just addressed something that I find is very interesting. China's growth is at a negative, and Europe is stalled. Does that mean that it becomes secular, or meaning do things turn in a circle? Will the United States then, be one that comes behind it? It just kind of slow before their economy stalls, or are we still on pace to maybe have growth faster than those other economies that are stalled or are in deep trouble as far as growth?
Well, that's a great question, and that is the game that's being played now. Is the speculators are trying to gimmick that out and figure, what is the best play right now. So it's a three-horse race, let's say, or four-horse race. You have the emerging markets, you have Asia, you have Europe, and you have the U.S. And the question is, where is the best, safest haven?
Mm-hmm.
Sometimes Europe has looked better than the United States. Sometimes the euro was stronger than the dollar by a vast margin. Right now, the euro and the dollar are about even, and that's the first time that's been the case in 15 years, almost 20 years. So the question is going forward, people are speculating, who is going to come out ahead in this little horse race. And in the meantime, they're trying to shift their capital to get the most out of what they can until the game changes and they come up with a new leader. And right now, the appearance is that the U.S. is ahead. We look better than Asia, Europe, and the rest of the world, so that by default, the money is coming into the U.S. We're still paying positive interest on our debt instruments. In other words, if you buy a debt from the Treasury Department, a bond, 2-year, 5-year, 10-year, 20 or 30-year note, it pays interest. Some of the European and Asian markets actually have negative yields on their debt payments. So that doesn't look as attractive. So short term, even though you might get only 1% or 2%, it's certainly better than getting a negative rate of return. So by default, a lot of money is coming into the U.S. I personally think this is temporary. I think the U.S. is not going to sustain this wonderful appearance. And I think in time, the rest of the world will become as dubious about the dollar's future value as we should be right now in the U.S.
So, Fred, over the years, and you and I we spoke about it, precious metals are supposed to be a hedge against inflation. You touched on that momentarily. Prices are high, right? So I'm just trying to understand it. And you said it's an unusual circumstance, but shouldn't prices be higher now for gold and silver? And being that they're not, this is the best time to buy, I would guess. But shouldn't they be higher, or is there a breaking point where they will start just to jump off and take off?
Yes. There is definitely a relationship between inflation and the dollar, so that as inflation is this high, we should see precious metals much higher, because the inflation should be driving the value of the dollar down, because it should cause the speculators to be cautious about wanting to buy U.S. dollars. Let's say the inflation is accepted at this 9% level. Why would you have a bond that pays 2% a year if inflation is 9% a year? So in other words, you're losing 7% a year, even if you're gaining the 2% interest they pay you on the bond. That makes no sense. But if by default it's the best you can get, it might be the best you can get. So the money is in there for no other reason that there's just simply no other place to go. Now, this should push down the value of the dollar and subsequently make gold and silver higher. The reason gold and silver prices are not higher right now is this temporary environment where the dollar, even with high inflation, has strengthened. But it's strengthened mostly against the foreign currencies. And that, again, is because the situations there outside the U.S., all across Europe, all across Asia, all across the emerging markets, South America, all over the world, they're faring much worse than we are, so that we still look attractive enough to where their money is coming here as a safe haven. And that drive of money toward the U.S. dollar has increased the value of the dollar. And that is what is holding down the gold and silver prices, even with the high inflation we're experiencing. So what you said before is absolutely right. This is a great buying opportunity for gold and silver, because the fact that the prices are down in an inflationary environment doesn't really make any sense. It won't last long, but it does create a great buying opportunity, and I think people should take advantage of that.
Well, this buying opportunity is, to me, is rare. Right, this opportunity is rare. It's not. It doesn't normally work this way, but hopefully people will see that eventually the price for the metals will go up, and I think that they will skyrocket up. But right now, this is the best time. And so, how does one get involved right now? What would be the best way to start if they have not started already?
Well, there's a lot of different ways to skin a cat, as they say. But over the decades that I've been involved, I've found the safest and the simplest way for people is to physically take possession of actual gold and silver, where they get delivery and they own it in their hands. That provides them with that wealth protection. And this is what I think people should recognize, is that when things begin to shift, gold and silver prices will definitely continue to increase. And even though they're slightly down from their recent highs, They're
Yes.
still a lot higher than they were even a few years ago, and a few
Yes.
years before that. I mean, you remember the days when we used to talk about gold when it was $350 an ounce,
Hmm.
and it would run up to maybe 400 and then pull back to 370. And,
Hmm.
there'd be days it was a little higher, a little bit lower. Once in a while, we'd get a pullback into the mid 300s, and it was a deal. Well,
Hmm.
then we saw that kind of number grow, and the pressures pushed gold to the $500 level. And then
Uh,
we never saw the 350s anymore or the 400s anymore. And then it became
Never gonna see it
$700
again.
gold and $800 gold and $1,000 gold. Well, it keeps ratcheting up. So even though there are occasional pullbacks, if you look at a graph of gold over the long haul over 10, 20, 30 years, you can
Hmm.
clearly see it's continually been going up in value.
Hmm.
So this
Hmm.
recent dip, which has been maybe 10% of its, relative highs recently, has
Hmm.
simply just created a little bit of a good pullback buying opportunity. And if those people out there who have not started yet have the wherewithal to start accumulating, well, it's great to be able to get gold and silver when they're on sale.
Well, now, and I go back to when just purchasing silver at $2.80, even a little bit before that, and it's gone up quite extensively since then. But relatively, I mean, things happen in relative terms. But people could start with silver, but is buying gold and silver considered an investment? And if it is it taxed the same way that stocks are when people buy stocks?
Well, gold and silver are a long-term gain that you would pay, and there is a collectible rate that people pay the taxes on gains in gold and silver. That's more of a question for accountants because a lot of variables come into play, people's income and things like that. But like everything else in life, if you buy silver at $10 an ounce and sell it for 20 years later, then you have a profit and you have to report that gain and pay the taxes accordingly. So, yes, there are definitely tax consequences. Now, the way the coin industry works is that I'm not obligated for those people that buy gold and silver in the form of U.S. coins
Hmm.
to file any forms with IRS or make any reporting requirements to any government agencies. Individuals are required to do that on their own. Unlike, for example, those people that buy their gold and silver in the form of what we call bullion, which are the non-coin things like bars or round things that are not
Right.
actually coins. When you sell those, the dealer has to provide the information at that moment directly to IRS. So you have a federal obligation there that is, pretty obvious and straightforward, and it has to be followed through. So the regulatory differences, I think, make the coins a little more appealing. I like the idea they treat people like adults. You report what you report, but it's not up to me to have to babysit what you do and report to, the government what we've done.
Hmm.
But I also like the gold and silver coins because, they can never make another 1964 or earlier dime quarter or half
Hmm.
dollar. And
Hmm.
that's what we think people should own. That cannot be
Understood.
reproduced. So whatever's out there in the world, that whatever people own now,
That's
that's the
it.
supply that will exist forever going forward. Every future generation of Americans, we will never see more gold and silver coins available than what exists right now. So you own something there that's also a fixed supply, and nothing better for future growth than something where the supply can't be changed.
Is there something that you would like to tell the audience regarding the purchase of precious metals? Two questions, any two questions that seem to come up the most in your conversations with people that are interested in buying gold. Is there something that most people ask that can be also shared with the viewers today?
Sure. Common questions come up. For example, a lot of people ask how would they use the gold and silver coins they acquire now? Because
Hmm.
some people think that they're going to be like conducting commerce with it, like you do with your paper money, like you'd be carrying your silver dimes and quarters down to the local supermarket
Hmm.
and buying your basket of food. I don't really see that as the likely way of that we would conduct business, as opposed to the idea that the gold and silver coins are merely a method of storing your wealth before
Hmm.
you're ready to spend it so that it's being stored in a better form that isn't eroding. It's like the difference of having a gallon of milk and leaving it on your front porch or putting it in the refrigerator. It's going to
Hmm.
last a lot longer than the refrigerator. So, in the
Hmm.
same sense, your gold and silver will retain their buying power a lot better over time than paper money, which is
Hmm.
like that gallon of milk in the hot sun. It's going to deteriorate in value very quickly.
Very,
But
very,
the
very
idea
quickly.
of actually conducting commerce with gold and silver coins is really unlikely, because it presumes that the U.S. paper money has become absolutely worthless. And I don't believe we'll ever experience that. But that question comes up frequently. How do I use the gold and silver coins? And again, the answer is it is a storage method of protecting your wealth by putting it in a form that will simply be able to hold up better over the next 5 or 10 years than what we perceive is going to happen to the purchasing power of a paper note that they're printing every day more and more of, that it's unbacked.
And a second question.
Second question is basically about how much people should have and how to acquire their gold and silver. And again, as I mentioned, I think the safest and only method I've ever encouraged people to do is physical delivery. And in terms of how much, I believe the diversification of one's assets is really what we're trying to accomplish. So I'm not one of those people that suggests that everything you have should be in gold and silver. I don't think anything exists in the world that is that safe and secure that it should represent all of one's wealth. What I do believe is gold and silver should represent a portion of what one is putting away for the future, because you need to have multiple areas that your money is in so that you can sustain good growth and stability no matter what happens to the economy going forward. Because there are always going to be things that come up we can't predict. No one 3 years ago could have predicted COVID would have become the #1 economic issue. We couldn't have foreseen that happening. We could not have foreseen the response of the federal government, printing trillions of dollars and stimulus checks being sent out to every American. None of that could have been foreseen. So things come up. We don't know what's going to happen in the future. But in history, it seems to be very well established that it's about diversification. So the second question that comes up most frequently is, how much should I have in gold and silver? And again, I always believe it should represent a good percentage of the wealth that you put away. Let's say, for example, for those that have other physical assets, maybe 15% of your net worth that is invested should definitely be in something that's not paper. For those that have nothing else, these days right now, there are people that have 25% of their money in gold and silver because they just don't buy the premise that paper money is a good place to be in any form. The stock market's become too volatile for a lot of people. So, these are personal choices. But again, it's about diversification.
Ladies and gentlemen, thank you very much for joining us. Fred Dashevsky from U.S. Coin Capital. And Fred, can you give the number for everybody? I'm going to place that at the bottom of the screen as well, so people can see the number and that they can reach you at what time. Can you tell our audience?
Sure. We can be reached at 800-878-COIN, which is 878-2646. And generally, we will help guide people into how to properly accumulate the gold and silver coins, how to determine which gold and silver coins are best for them to own, and then again, physically provide you with the actual product. So feel free to give us a call to discuss this, 1-800-878-2646. Visit our website at US Coin Capital, spelled like the building, CAPITOL, uscoincapital.com. And if you follow the Facebook link and like the Facebook page, you'll get alerted for any of the new podcasts or information that we post on a regular basis.
Ladies and gentlemen, thank you very much. Fred, thank you as always. And this is just one of the segments of many. We have more to come, ladies and gentlemen. So thank you for joining us this week, and we will see you again soon.